The RSI indicator, relative strength indicator, is a very popular, very good tool to use for your trading. It basically gives you signals of when the market you're looking at is getting too hot and is likely to turn either north or south again. And it has its own standard set of rules around something being overbought and oversold, and that's what most people use. But in this video I'm going to show you 5 alternatives to take to your analysis and trading. Hello, I'm Stephen Req'd, trader and founder of TheStopHunter. So diving in straight away, let's add the RSI indicator to our charts. Now I'm using TradingView for this video, and it's going to be pretty much the same on any charting package, but this is the one I use. So let's go up to the indicator section. We're going to find relative strength just by typing it in. I'm going to do it this way. I've saved it as a shortcut, but you can actually see that there's a lot of different relative strength variants created by other users to give you a different angle or edge on things. But we're going to use the standard relative strength index. We're going to click on that. It's going to add it to our charts. There we go. We see it coming out in this purple default, and that is the basic line. Now I'm looking at Amazon, the US stock, on the 30-minute time frame, and what I'm going to do is make it just a bit more clear around the RSI inputs, and we just go to the settings. It's always default 14, and that's the standard Wells Wilder default, and we just want to, like I say, make things a bit clearer so we can see what we're doing, and we can easily change the defaults. Now I'm setting this up as the standard RSI rule approach, so you can see what you get, and obviously it's set at 70-30. You can change those variables, and we're going to look at that during this video, but this is the general RSI setup. So there you go, a bounded study between 70 and 30, and let's now just get into a bit more of the rules and the construction of the RSI, you know, a bit of the detail, so you can understand more about that in its standard format, because then that's going to help you a lot if you want to take it further and use some of these alternative methods that I'm going to show you in a minute. Now firstly, don't confuse the RSI indicator with the relative strength tool. Some people do that and it can catch you out, so make sure you do actually have the RSI on your charts. Now the RSI was developed by a guy called Wells Wilder, a very famous technical analyst, and he also created the directional movement indicator, the DMI there, and he created the RSI to measure the strength of a trend relative to previous activity. Now his basic thinking was that in an uptrend the closes tend to be higher, and in a downtrend the closes tend to be low. Obvious really. And the RSI only uses the closing price in its calculation. That's very important to note, and the RSI then smooths out erratic and sharp changes in the price. Now the science and the maths behind the RSI calculation, well, there's nothing to be scared of there. It's pretty straightforward. It's based out to 100 to make it into a percentage number. RS stands for the relative strength, and that's just the average of the X day up closes divided by the average of the down day closing prices. Now, like I said earlier, 14 is the standard default, but if you want to speed it up, lower that number. If you want to slow it down, higher that number. And by comparing the average gains of the ups and the downs, and then you express that, like I say, into that percentage form, or that band between 0 and 100, you then get a key number, whatever you're analysing, and you can then start to create these boundaries around overbought and oversold. And Wells Wilder classified overbought as greater than 70 and oversold less than 30. and sometimes stronger trending markets use the 20/80, a bit like in the stochastics, but the default is the 70 and 30. So let's just show that in practice back to our original Amazon example on the 30-minute chart. We can see the RSI on there. Now we can see actually the RSI bangs between the 70 and 30 quite a lot there, and rarely goes out of the bands of that 70 and 30 range. But to the upside, if the RSI goes above 70 and then turns back in under the 70 line again, we're looking to sell, and vice versa. If it goes under the 30 and turns back in, we're looking to buy. That's pretty much it. I find it difficult to trade that just on its own. I would need other assistance with it, but that gives you the general idea of the standard rules that most people use when they look at the RSI. Now, for the rest of this video, we're going to take it on to 5 different ways, building up from what we now know, to use the RSI indicator. So straight back to the charts to go through our 5 alternatives. Now I've changed the chart to a higher time frame, the 1 day, and I've also moved it to WTI crude oil just to mix things up. The RSI is still left at 70.30. Now for our first alternative, we're going to use simple trend lines. Instead of drawing them on the price chart, why not draw them on the RSI? Very easy to do, but they give you great breakouts and trend reversals within the RSI structure. So let's just draw on a few. So I go up to my drawing tool, and really it's a very subjective approach, so you can draw your lines wherever you like. Remember the general trading rule of 3 touches is a strong trend, so 1, 2, 3, 4. And actually, as that breaks there, the price came off. You can do short-term examples, and again, where it breaks, the price goes up, and you can play around and create your own rule set around this methodology. And like I say, I find it highly effective, and you can make it more effective if you change the settings. Like I say, if you want a 5 period setup, for example, you see how that changes the indicator. Same daily chart, but now we've got a lot more ins and outs of the bands. And again, we can draw on our charts. Maybe our rule is take it from when it's under the 30 and above the 70 as our trend line drawing rules. Like I say, subjective, do what you want, but I've sped that up so we're going to have more RSI action, shorter term, but first one, use a simple trend line to draw with. And I suppose also as an add-on to the drawing of the trend line, you could actually use this as a divergence tool as well. So part of the first one here, and you would be looking for a sort of opposite move in the RSI. Now I can't see an immediately obvious one here, but what you'd be looking for is, say, a trend to be going up like that on the chart, and then in the RSI we'd be looking for it to go down like that. Obviously I've only just done that to make up the example, and we see like that sort of cool, it's all like a loudspeaker megaphone type thing. We're probably going to expect the price to come back down, and again, if we switch the trend around, a bit like that, we could be expecting an up break in the price. So again, using trend lines, slightly different to drawing it on top of the RSI, but using one on the RSI and one on the price to create a type of divergence strategy. So the second option that you have is in fact what I like to use if I'm using the RSI tool, is to change the 1730 just to a single line, call it the 50% line, and this again creates, I think, more opportunity for trade signals. So we go into our settings, we can leave it at 5 if we want, we tick off one of the bands, we change the inputs to 50, and in this instance what we're looking for is the price to cross over the 50 line for a buy and back under for a sell. Now obviously you see the shorter term you've got more jumps, maybe some more false signals, so again play around with the inputs, make it a bit longer, for less signals. Go back to our original default, we could have a buy here and a sell there. So second method is simply get rid of the 70-30, switch it to a 50% line and take buy and sell signals as they cross. Again, strengthen that with other analysis and inputs to verify and back up your trade decision. Now the third one I really like, and I use an awful lot if I'm using the RSI. We go onto the RSI, we remove the standard settings. Let's just get the settings up there, and we take off the upper and lower band, leaving us just the RSI indicator. And what I'm going to do now is I'm going to actually apply a moving average to create buy and sell signals on top, and again play around with the input of the number. I'm just showing you a rough idea of what to do. So we do click on the actual indicator, we add indicator, we go down there, say we want, I don't know, moving average exponential, put it on, we play around with the settings. Remember, don't back test. Let's get the length of that going a bit longer to make it more obvious for you. I don't know, random, pick a 30, and you could say, again, here's an example, as the RSI indicator crosses up through the moving average it's a buy, which in this instance is obvious and works very nicely, and vice versa for the sell. Again, use that with other supporting evidence, but it's easy to create a trading strategy and system around that method. So number 4 is actually adding strength to our decision making. Now the RSI, as I mentioned earlier, is based off the closing price. Now if you know your technical analysis, you know the rule of collinearity. You don't put things together based off the same input. So to enhance the power of the RSI here, I would add a tool that had maybe basis off of volatility or volume or sentiment to go alongside here, and you could even add something quite simple as the stochastic indicator if you're familiar with it, because that's more of a volatility based average true range approach, so it's a different input, and you could be lining up signals together. Let's change the settings around a bit. I like using a quick 5-3-3 approach. Let's make it a bit chunkier so we can see it. And zoom in a bit, and you could be saying, well, if the RSI is giving me a sell signal, I'm going to get in with the additional signal of the stochastic. So that is my 4th method. And finally, why not consider for number 5, people get stuck on the candlestick chart, why not use alternative charts? So again, it's very easy to do. Technology allows us to do this. You just go up to the chart button. We could turn that to Heikin Ashi, which smooths out the data and smooths out the RSI even better to make even more clear signals. Or why not try some of the alternative Japanese charts? Here it is with a Renko look, and we'd have to mess around with the inputs to make it look any good. You can be buying and selling when the lines cross. Similar type approach, but just a different chart. So another way of using the RSI. So there's 5 alternatives. all quite straightforward. Have a play with them. All great for coming up with a new edge, something slightly different to get you working into your trading differently to everyone else, to hopefully make you a bit more profit. Now, if you're interested in the other charts, in the description below I'm going to put various courses that I do on e-learning video stuff with the links, so you could get into them, and you'll find more resource and information also in the description below around the content of today's video. So the RSI tool, more than just its standard parts, it's a great all-rounder with many alternative ways now of playing it. So my suggestion, dig in, see what you can come up with, new strategies, edges, ideas around the basic principles. Hopefully I've inspired you and given you enough info there to get you going. So if you like today's video, please give us the thumbs up, and don't forget to hit that subscribe and bell buttons to receive any future further notifications of content I will produce. So don't forget to check the description below for all that extra content. Put your feedback in the comments so I can see what you're thinking. Ask me questions, I'll see if I can get back to you. Any other suggestions of videos, always welcome. I'll see what I can do. But all that's left for me to say now is thanks for watching, good luck with the trading, and I'll see you in the next video.